What's up, YouTube? Hello and welcome to Not Dumb Money. This is my first YouTube video, and I want it to be a good one. I spent a lot of time thinking about what topic I should cover in my first ever video, and I narrowed it down to 2 topics. I thought it would be useful if I tell you about the free online tools that I use to screen, analyze, and learn about stocks. I also thought it would be interesting if I instead shared with you a little bit of history, gave you an overview of my personal experience with stocks, when I started, what stocks I owned and when, how I did over time, and how I ended up with the portfolio I have today. I couldn't choose between the 2 topics, so I put it up for a vote on my Instagram. You overwhelmingly voted in favor of the second topic, my history with stocks. So let's go. Let's go back to 2009. The world was still reeling from the global financial crisis. The Dow hit its lowest level in March, but just 1 month later in April, Time magazine, more quickly than it began, the bank crisis is over. The National Bureau of Economic Research said that the U.S. recession ended in June. By 2010, President Barack Obama declared that markets are now stabilized.
And when we took that program over, we made it more transparent and more accountable. And as a result, the markets are now stabilized, and we've recovered most of the money we spent on the banks.
That same year, I read The Big Short by Michael Lewis. I was fascinated. I wanted to learn more. I read The Intelligent Investor and Security Analysis. None of this was completely foreign to me. I do work in financial services full time. More on what I do for a living in another video. Maybe. We're now in 2011. I was earning decent money, and I decided I would set some aside and begin investing in the stock market. I did not have a solid strategy, but I did have a few principles, all of which continue to hold true today. First, I will only hold long positions, no shorts for me. Second, I will never use margin. I just don't want to take on that risk. Third, I will focus on fundamental analysis. And finally, I will only invest in companies that I fully understand. I must understand their product, how they sell it, and what it costs to sell it. Ultimately, I must understand how they make their money, and I must be able to explain to the average Joe how they make their money. If I can't explain it to someone else, then I probably don't fully understand it. I bought my first stock near the end of 2011. It was Apple.
Thank you very much. It always helps. Thank you. It always helps, and I appreciate it very much.
When I started, I would define myself as a swing trader. In 2011 and 2012, I made hundreds of trades, buying and selling stocks in dozens of companies. I made a net return around 9% in 2012. I beat the Dow, which returned 7%, but trailed the S&P 500, which made 13%. I think it's crucial that any investor benchmarks their returns. This is how I assess my own performance. The alternative to picking stocks is investing in an index tracker. It's definitely easier and probably safer. If I'm not doing better than the Dow or the S&P 500, I might as well put all that money in an index tracker. 2013, it was okay, but not great by any measure. I had a 7% return, but the Dow grew 35% and the S&P 500 was up almost 30%. Again, I made hundreds of swing trades that year. I decided I would take a different approach in 2014. I would start investing in companies with a longer-term view of holding stocks on an indefinite basis. I would couple this with some swing trading. That was the year I bought stock in Disney and Google. They would become the first long-term positions in my portfolio. In 2014, I returned 11%, which was the same as the S&P 500 and higher than the Dow, which returned 8%. 2015 wasn't the best year for stock markets. The Dow dropped 2% and the S&P 500 was down 1%. I, on the other hand, generated a positive return of 2%. Again, this is why I think benchmarking is important. A 2% return might not seem like much, but it's all relative. 2015 was also the year I added Facebook to my portfolio. In 2016, I continued with my strategy of holding long-term positions combined with some swing trading. I returned 16% that year, compared to 13% for the Dow and 9% for the S&P 500. 2016 was defined by a strong rally during the final quarter. They called it the Trump rally.
From this day forward, it's going to be only America first. America first.
And the view was that his policies will strengthen US-based businesses. On to 2017. I added Apple as a long-term position. I had many swing trades with Apple stock in the past, but I thought it was time to make it a permanent position. 2017, another good year. I returned 26% while the Dow and S&P 500 returned 25% and 19% respectively. 2017 was the best year for US stock markets since 2013. The US economy was growing and many large corporations were announcing record profits. Corporate tax rates were reduced and companies were being incentivized to return their overseas cash back to the US investors, who were bracing themselves for higher dividends, more share buybacks, and less debt. I thought so too, but I also thought that we could see higher executive pay and increased M&A activity as companies try to decide what to do with their excess cash. So far, so good. Not. 2018 was a wake-up call. I lost a lot of money from my swing trades. I was down 13% for the year. The Dow and S&P 500 were also down, but they both dropped by only 6%. The stock market was under pressure. Investors feared tighter monetary policies, and there was a lot of uncertainty regarding the impact of tariffs and trade wars. Earnings were coming in mixed. I made a decision at the end of 2018 to stop swing trading. I would close out some existing positions, but no more swing trades. Before the year ended, I added Microsoft and Berkshire Hathaway to my portfolio. I recovered in 2019. I returned 21%, which was the same as the S&P 500 and higher than the Dow, which returned 16%. When the year ended, all my positions were long-term holds. I added Amazon to the portfolio, and going against my own principles, decided to gamble on Tesla. I bought a relatively small stake. I thought the stock could go either way, but the upside was so enticing. So I gambled. We're done with the past, so welcome to the present. 2020 has been tough. This is a year that will be defined by the COVID-19 pandemic and its global social and economic impact. Stock markets crashed during the first quarter of the year, only to recover during the second quarter. I added electronic arts to my portfolio during that second quarter. By the end of June this year, my portfolio was down almost 9%, slightly better than the Dow, which is down almost 10%, but trailing the S&P 500, which is down just 4%. Tesla has been a saving grace, but it's still a small position in the portfolio. It's hard to say what the future holds, but I am almost certain technology will be a big part of that future. You can gather as much from my current portfolio. Long-term implications from the COVID-19 pandemic are unknown, but there will be permanent changes to social behaviors and consumerism. Then again, people are forgetful, and we might be telling a different story in a few years. Through my journey, I've owned stock in a lot of different companies. Apple, Activision, Alphabet, aka Google, Amazon, Bank of America, Berkshire Hathaway, Cisco, Citigroup, Cirrus Logic, Disney, Electronic Arts, Facebook, General Motors, Groupon, Hecla Mining, Johnson & Johnson, Microsoft, Sprint, Sony, Seagate, Southwest Airlines, Tesla, Teva Pharmaceutical Industries, Under Armour, Visa, Wyndham Hotels and Resorts, Wynn Resorts, Xerox, and many more. My portfolio today is just 9 stocks with about 20% in cash. I don't plan on publicizing the size of my portfolio, but I will definitely be fully transparent on its breakdown. My interest in the stock market is probably higher than it was ever. I know that I have a tech-heavy portfolio. I know all my positions are mainstream, but it's been okay overall. That's it for now. Thank you so much for watching. What do you think of the video? What are your thoughts? Do you own stocks? Let me know in the comments. If you enjoyed this video, please do me a huge favor and hit that like button. Subscribe and turn on the bell notifications. This tells me that you want to see more. It's been a pleasure. Much love. Peace.